I'd like to now call up on stage Arnold February. Let's give him a round of applause. Sir, thank you. Yo.
Thanks, my man. I must just get my presentation.
Yes. Yeah, yours. Yeah, we'll plug it in here. And he's going to be talking about what makes funding work. Thank you, sir.
All right, thank you very much. Good morning, everybody. Hope you are all well. My name is Arnold February. I'm the Regional Investment Manager for a company called Business Partners Limited. We provide funding as well as mentorship to small and medium-sized businesses. I was still laughing of the token you've put on compliance. You must love it. Normally it's a burden, but I like that. It speaks about the passion as well. So today I will be talking, I'll have a general discussion with you. I'll talk about business principles that are important for entrepreneurs, that as an investor we want to see. And then I'm going to talk about how a company like Business Partners or a general institution that provides funding looks at transactions. And then I'll end up with a couple of reasons of why an application is referred back or rejected. All right, so just in terms of business principles, and these are generic or general points. And the first one is, in business, you don't go into business to make a living or to earn a salary. That's actually not your primary reason. If you're serious about business, you're going into business to create wealth, to create assets or initiatives that create work for you where you are not strained with your time and your energy and your resources. That's really the core objective. And so there's a clear separation between your personal needs and your business needs. So that's the first one. The second one is, and I've heard this in a podcast, it basically said you can buy anything you want. All those nice houses that Yusuf had on and the cars and everything. You can buy everything you want, provided that the money that you use to buy that comes from assets or investments or passive income or business. So you don't just become a consumer, you first become a creator, and with that profits of your creation, you can then buy what you want. Make sense? All right. Then a lot of entrepreneurs, especially if you start up, they tend to go at it alone. All right. So a couple of things that we see is, as an entrepreneur, nobody can do it better than me. All right. Arnold's the man. Nobody can do this better than me. Or I don't have the time to train so-and-so to do it, man. I'm just going to do it myself. It is one of the biggest mistakes an entrepreneur does. And you need to see yourself as an important part of the business, but really your job is to train the people, to hire the right people, to put in the systems so that the products and the flow runs without really you having to have a finger on every business decision. All right. Then there's a couple of things, and I think Yusuf mentioned it as well. So there's a saying that goes, as an entrepreneur, you don't have to know everything, but you must have access to people that know what you need. And you must always be learning from them. So the other point, I'm going to jump between the points. The other point is, in business, time and money are both resources. But your time becomes a more important resource than money. Now, the entrepreneurs that pitched today, the primary objective was money, all right? Which I understand because of the stage of the business. But believe me, when you solve your money problems, you only solved your money problems. You still have other issues, and your time becomes your scarce resources. So, a classic example, I know how to do my personal tax and business taxes, but I pay a tax practitioner because I can't deal with the emotional stress of dealing with SARS, or the time that I will take to do my compliance, Yusuf can do it in a fifth of the time. And I can hold my tax practitioner accountable. So it's a very important principle in business as well. Does that make sense? Okay. Now, a lot of entrepreneurs, when they pitch a business, they don't iron out what their competitive edge or their competitive advantage is really. What really makes you different? What makes your product different, your service different, or your core objective different, and why people want to invest in you. Now, even if you start your business and you grow it big, remember you're still dealing with people. At the end of the day, people are people. So just bear that in mind. At the end of the day, people want to be trusted, they want to rely on you, and they want to know that your word is worth something, and the products that you offer is quality. In business, I heard this in a podcast. You are wasting your time if you're not solving a problem. If your business is not solving a problem, you're actually wasting your time. And that speaks to the core objective of the business and the potential and the size and potential of your business. You must be in a business with a purpose way beyond just money. This is an important one. This is a personal credo that I use, and I want to share it with you, because entrepreneurship is hard, right? Regardless of how sexy they make it out to be, it's hard, it's difficult. But you have the additional burden of being a role model. So as an entrepreneur, you must now be consciously aware that what you do and the impact that you have on your customers and your workers and your community makes you a role model. So if you operate with integrity and you comply and you share your wisdom and you share what you've learned and your wealth, then you will have the blessings of the people that you work with, the networks that you work with. So it's a very important one for me, because entrepreneurship is not a get money, quick, rich, wham, bam, thank you, ma'am scenario. It's a burden, and you are a role model. So if you don't want if you don't want to acknowledge that responsibility, you really should question yourself. I'm speaking truth, all right? So don't throw stones at me. I'm just projecting the values that I think entrepreneurship should have within our country. All right, then another important point. Let me just get this going here. Another important point is you're responsible for everything in your business. Unfortunately, you can't call somebody or refer the responsibility on. Okay, so you're the captain, but you also take all the knocks. And in business and in finance, particularly, with respect to the age in which we're in, the information age, I'm going to say this as I'm going to say it. Take it how you want to take it, but this was told to me already. There's no reason for you to be dumb. The information, the democracy of information out there, it is insane. What you can get on the internet, on your cell phone. There's really no reason for you not to know anymore, or at least have a general understanding or a reach to people that have an understanding of what you need for your business and for your funding. And books you get free books on business and on funding. So With the democracy of information, the point of knowledge is an important point, and it's part of your responsibility. Now, with regards to funding, this is a very important point. Borrow only what you need, but not a cent less. Borrow only what you need, but not 1 cent short. I would rather give an entrepreneur 10 Rand more than what he or she needs than give them 1 Rand short, because it will impact the efficiency and effectiveness of your business. And then when you borrow money, understand that there is an opportunity and an opportunity cost of money. Right? And you've mentioned the opportunity cost as well. So I'm going to give you an example. It normally works with an audience. So it's a simple example. I'm going to use you, sir. What's your name?
My name is Tapelo.
Tapelo. All right, Tapelo. So here's an example. So I assist you with your business, and I now give you a 100 Rand, no strings attached. Let's make it a bit more, all right? 100 is solid. 100,000 Rand. Will you take it? Of course. I mean, it's 100,000 Rand. I mean, somebody asked for 100,000 Rand earlier, right? So now, second example, second deal. I get the same deal, but now you're getting 110,000 Rand, but I'm going to keep the 10,000 Rand and you get 100,000 Rand. Will you take it? Do you see that hesitation? What is your net effect? It's the same. In fact, it's even better because now 2 people are benefiting from it. Okay, so there's a cost of the money, the 10,000, but the opportunity was 10 times more than that. So you have to, in business, think about money in terms of cost as well as the opportunity cost of it. A couple of mistakes that I see in business is that entrepreneurs, they borrow money for short-term solutions. So they're running dry on cash, right? But technically speaking, you must only borrow money that makes you more money, because there's a cost of money. So if you borrow a 10 Rand and the cost is another Rand, try and make that 10 Rand into 20 Rand, etc. I don't know why I'm using small figures. I think I'm used to talking to my son. Talk about 10 Rand. But the principle is money must make you more money. You don't borrow money to survive. You borrow money to thrive. Make sense? Okay. Then another important thing is, if you need money for a long-term investment, you're buying a business that will grow and you'll really reap the rewards in 5 years or 10 years, or an asset that has a value, a lifespan of 5 years, or a property that has, I think that gentleman is into property, so that's a 10, 20 year. Don't do short-term borrowings. Don't borrow 3 months, 6 months, short-term money for long-term assets, because short-term money is very expensive, and the liability must match the useful life of the asset. All right. Now this is an important one. If you, let me just go back. If you're not putting in your cash and your time and your resources, how can you expect an investor to put in his or hers? You have to show commitment. We call it skin in the game. But you have to give it your all. You must be willing to put something on the line. Some entrepreneurs get rejected because they don't want to sign surety. They don't want to sign a piece of paper. I mean, we invest in entrepreneurs. If you don't believe in a business enough to sign surety, why must we fund? Then the aspect of risk and reward is very important. So there's a correlation between risk and reward. So if you do a high-risk business, you only do it if the returns or the potential is high. If you do high-risk transactions or business, but the returns are little to medium, you're actually gambling. All right, so keep that in mind. And then very importantly, so there are different types of funders out there. Does somebody want to take that? Okay. There's different funders out there with different objectives. Some institutions finance because they want to, their objective is job creation or green initiatives, or they want to develop entrepreneurs. So they got a developmental objective, and they're not really looking for a return on money. Other funders want to fund on the basis of viability, and that their money must be repaid. It is your responsibility to identify, to understand the spectrum of funders and to identify funders that match your business objectives. All right, let's move on. Now I'm going to talk about the funding application and the success of funding. Now, different institutions assess applications differently, but there are certain principles or fundamentals that are generic or that you can find in all institutions. So when a business application is assessed, it's usually on the pillar of at least the following three. The first one is the entrepreneurs. The entrepreneurs must have skills, knowledge, networks, and resources within the industry or within the business that they want to operate. So you must have solid entrepreneurs that can get things done. All right? The second one is the business. So some businesses have high barriers to entry. There is a lot of compliance. There's perhaps, I think you mentioned, sir, with the juice, you've mentioned the health and safety aspect. The health and safety aspects of it. So certain industries have more compliance with others. So that's something we will look at. And then also we look at what stage you are in the business. So a business, the lifespan of a business, you start and then you grow. So there's something called growing pains. All right? So there's pains of growing that you have to identify. You're not going to go from R1 million to R100 million business with sunshine and roses only. There is pain of doing it, and you have to evolve your business, your systems, and your efficiency accordingly. And then the third one is if you're borrowing R1 million, if you're borrowing R1 million but you don't have any assets or collateral to offer to the funding institution against that, then the security, then there won't be security for that loan. So the risk, financial risk, is perceived to be higher, and so you either won't get approved, or the investor will approve it, but they would want a higher return on that money. So this is generally the overview of all funders. There are a few more depending on the funding institution. Now, I want to tell you about some things that I see when we receive applications and we review it. I want to tell you about some things that I see that you could perhaps learn from. So with regards to a business plan, the business plan, it's very important that it's clear what you do, why you're doing it, what your products are, in which industries you're funding, operating, in which provinces you're operating. I don't want a business plan that's this thick, that is a thesis that talks about your family members or what you've heard at a braai. You must keep it relevant to your business. I'm going to tell you, this is really what happened when I was still in Cape Town. A gentleman came in and he dropped a business plan. It was really a monster of a business plan. It was a thesis, you know. I think he thought he's studying honors and he needs to submit a report. And what happened was that business plan went to one of the senior investment managers who reviewed the business plan. And as he's reviewing, he's telling me how irritated he is of the read because it's irrelevant information that's in there. The substance of the business wasn't sufficient for approval, so it was rejected. The gentleman came and picked up the business plan. He paged to the middle, and he took a hair out. He took a hair out of the business plan, and he said, "You didn't read my business plan. There's still a hair in the business." So I can't make it up. That's a true story. So this is how we actually operate. This is real life. So I've had a business plan that's 2 pages, but the substance of what I want is in there. The rest of the information I'll pick up and I'll phone you, or we'll have a coffee, or I'll send an email. You understand? So take the fluff out, get to the core of selling the business, and cover the fundamentals in a business plan. Keep it simple and work with facts. So I've had a deal up on Friday that was referred back, and I'm just making this example. So the gentleman is importing something from China, but the report talks about there are various suppliers in various provinces with various prices, and he can bring this in. So that's not enough. A funder wants to know the specifics. Who's the supplier? What is the cost of the funding? What is the turnaround time? What is the risk? What is the warranties? So in that example, be very, very specific. I'm going to give you another example with a marketing strategy that I've seen before. Somebody says, we have a restaurant in Tembisa. There is 100,000 people in Tembisa. If we just get 10% of that 100,000, then we have so many people coming to us. And of that 10%, if 5% drink coffee, then we get that. No. A better strategy would be saying, we've dropped off 100 flyers or 1,000 flyers, and we've done a questionnaire, and people show interest, and they like coffee or breakfast or lunch or supper at this price. Am I still good for time? I'm talking a lot. So what I'm saying is, when in your proposal, be very specific and back it with facts and evidence. Okay. Then what investors look for? We look for strong entrepreneurs who have the passion and the networks to make it a success. We do look for compliance. Not just tax and labor, but certain industries must comply. This is a true story again. Just Monday, I rejected a business that has 7 years of great profits. 2 million, 3 million, 5 million rand profits. They want to buy a property. They can afford it with their eyes closed. Brilliant. In the financials, there is no reference to tax. None. Not in the current, not in the history, and it's signed off by a chartered accountant, not even just a professional accountant, a chartered accountant. Now, I declined that deal as an agent of FICA, because if SARS comes and SARS find out, hey, listen, you guys made taxes for 5, 6, 7, profits for 5, 6, 7 years, boom, here's a 10 million rand tax liability. Boom, here's another 3 million penalty and in interest. There's no way that we're going to take on that risk. SARS ranks above everything, above every funder. So the compliance or the cost of non-compliance in that case cost that entrepreneurs an opportunity of getting the property. The second thing to it is, in liaising with the entrepreneur, he almost played as if he doesn't know about the IT34 statement or the VAT statement. That is an even worse red flag for us. An entrepreneur that's in business that long that doesn't know. So those are things that we would look for in an application. Then another example, and this is again a real case study. Just Tuesday, one of my investment officers came to me and says, Arnold, I got an entrepreneur. He wants to purchase, he needs funding for, just wait for this, he needs funding for not 1, but 7 chicken lickens. He's never traded in the industry and got no money to put in. Not 1, but 7. I think he thought, okay, 7 chicken licken will give me 1 million rand, so 7 is 7 million. I can do with that. I mean, that was such an easy no. It's all right, so the higher the risk means that you either won't get the funding or that the cost of the funding will increase accordingly. Here's a couple of reasons of why business applications are rejected. Viability. A business can't afford the step up. We were talking earlier about one of these entrepreneurs, Yusuf, if I may, an entrepreneur that's running a lodge, but now needs to buy 2 additional lodges. So the step up is quite steep. And so the viability is not just on the affordability, but also the viability of the controlling of that application or that business. Again, growing pains. Then also the loan amount, another reason is the loan amount that an entrepreneur applies for is out of sync with their personal balance sheet or the business balance sheet. I don't know why, and I'm going to be honest with you, and please forgive me if I'm stepping on toes, but I don't know why entrepreneurs regard an application for funding as sometimes as if it's monopoly money. Like, I've had an application, the entrepreneur wants 50 million, all right? They got 500,000 to put in, and they're going to get money from this, that, and the other. That 50 million is repayable, and if business does not do well, you're going to have to stand for, and that 50 million might be dead for the rest of your life. So rather, and I think you've mentioned it, so rather grow within your limit, and as you grow, you expand within your control. And if you're applying for 1 million, 10 million, or 100 million, make sure that you can back it up with your personal wealth or your business wealth, if that it makes sense. Now, another reason why entrepreneurs get rejected is the lack of integrity of the information presented. I'm going to give you 2 case studies. Again, I can't make this up. This is real. I've received 2 applications within 2 weeks, all right? I'm not even going to tell you the industry. I'm too afraid you're going to guess a service provider. Those applications, word for word, verbatim, the same thing. The only thing that changed is the person that wrote the business plan changed the name of the entrepreneur and the business name. Word for word, those 2 business plans are exactly the same. Now, please, if you go into somebody that's going to write a business plan for you, number 1, you must vet that business plan and you must know that it's factual. And number 2, go to professionals. Don't go to somebody that's going to copy paste or cookie cut a business plan and send it out to 100 bidders hoping for a response. Another one was financial information. The integrity of financial information is a big problem for us. So what happens is entrepreneurs submit financial statements to a funder like Business Partners, showing great profits, let's say 5 million. And then we ask, all right, what did you send to SARS? Can we get your IT-34? Then they show losses to get tax refunds. So the integrity of that financial information puts a burden on business partners to reject, and in some cases to even declare to SARS that there is something not right here. So just bear that in mind. Then poor systems as well. We've seen businesses that as they grow, they just don't have the support in their system and infrastructure to support that growth. That's another reason. Another one is gearing. So the more you borrow, the gearing of the business is such that the cash flow required to just keep the business afloat, it's basically choking the business. So you can't have too much debt in the business either. And then sometimes, this is not very often, but sometimes entrepreneurs are just not convincing enough. We also reject applications in that regard because we invest in entrepreneurs. All right, so I'm almost done. So in conclusion, as entrepreneurs, you are young, aspiring entrepreneurs or entrepreneurs that's been in the business 2, 3, 5 years. Remember, the potential of your business is your responsibility, but you have stepped into a burden of being a role model. And that role model means you have to take on the ownership of running a business with integrity that somebody can look up to, and that you can now build more entrepreneurs within your family or within your community. All right, because for many of you, you are probably the first generation entrepreneurs. And secondly, there's always opportunities out there. First of all, see the opportunity, make the opportunity work for you, make money the right way, and if you're comfortable with your compliance and your purpose of being in business, then funding really shouldn't be a problem. All right, I'll leave you with that. Thank you very much. That's all from me.
Let's give him another round of applause. Can I pull this out? Is this yours? Yeah. Yeah, how'd you guys find that? How's that? It's not the fluffy stuff, it's the real stuff. And I think it's important, it's important for us to engage on the real stuff, because this is the makeup of business growth. Because, how long are we gonna keep winging it? At some point, the systems must kick in. At some point, compliance must be managed. And I think at the end of the day, that's the burden of growth. If you want to grow and scale, then you must be accountable, you need to be responsible, you need to make sure that you manage your business, so that you are not managed by last minute, hey, there's an opportunity, it's a tax clearance. There's a last minute opportunity, my financials are not on check, let's put 000 so that we can just get a quick tax clearance. Then you're working your way behind, because when a really big opportunity does come, one that you are capable of delivering on, then you are not able to actually meet that opportunity at the point of its benefits to you.